Hello everyone, and thank you for watching my videos. So far, we have learned how to gain the technical analysis that we need in order to study the market. Also, I've shown you how we can gain fundamental and sentiment analysis in order to study the Forex market. So, with all of that information acquired, it is now to begin the first step in developing your trading strategies. So, here's what I'm going to do in this video. We're going to learn how to develop plans of trading in the Forex market. And these plans must be solid and we must stick to those plans, because if we don't, then we cannot be successful investors in this market. So, here's what we need to know about trading plans. Developing trading plans and sticking to them creates trading discipline. Discipline is important because without discipline, then we cannot be successful when we are making our investments. So keep that in mind. Also, trading plans, they limit the amount of bad decisions and they keep emotions out of decision making. So in order to be successful investors, we need to learn how to make solid decisions. And we also have to limit the number of mistakes that we make, because it is so easy to make mistakes in the Forex market. Now, let's talk about trading systems. Trading systems determine how to open and close trades. So, we open a position in any currency pair. We need to know how long should we keep that position open, and our trading strategies can also help us in determining when and where would be a good time or place to close. Also, trading plans have analysis, executions, and risk management. And in the future videos, we're going to talk more about risk management. Now, why are trading plans important? Well, they're important for several reasons. Trading plans, they determine your direction to a successful trade. And we must understand that we must have a plan for every single position that we open. Because if we trade without a plan, it's the same thing as gambling in a casino. So we don't want to do that. Now, if your trades are not successful, either there's a problem in your trading plan or you're not sticking to your trading plan. So remember, the trading plans will determine how successful we will be in the Forex market, because if our trading plans are solid, we'll be successful investors. If not, then we will lose our capital. And I can't stress that enough, because 90% of all new traders fail. Discipline is important. So it is so easy to fail in this market. So we must take some time to determine how are we going to make our trades, and what steps must we take in order to make sure that any decision that we make is the right one, and that we are trading based on knowledge, not based on emotion. Now, let's talk about discipline in the Forex market. It is important to distinguish justified wins from unjustified wins. Meaning, when we make a profit on our positions, we need to know why we made a profit. We can't just sit back and say, yay, we made a profit, so let's open up more positions so we get more profits. No. We need to take time to understand, why did you make a profit? Because with that knowledge will compound itself when we open up a next position, and the chances of being successful on that position will increase. Also, we need to know that a justified win, it's when you create a very detailed trading plan and we follow the plan. So again, we see a pair. We want to get involved in that pair. However, before we open up that position, before we click that mouse to go long or go short, we need to know why we're getting involved, and why we're going long or why we're going short, and what must happen in the market to ensure that the market will move in our favor. Okay, so let's talk about goals for a second. It's very important to set goals in the Forex market because again, when we set goals, we have a general idea as to which direction we want to be heading in when we are getting involved in the market. So we're not jumping into the market blindly. So we need to know what motivates you to be a trader. Like, why do you want to get involved in the Forex market? Why are we studying the Forex market? Why the Forex market and not the stock market? So we have to understand that. And also we have to understand, what are you trying to get out of the Forex market? What 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 level of success do you want to achieve when you get involved in the Forex market? And what is success to you? So those are things that we must think about because that also helps us with our trading discipline. And we need to be specific in setting your goals. For example, don't just say, I want to get rich in the Forex market. Have an idea as to what do you want to do with the profits that you make. What is it you want to achieve? Do you want to retire at an early age, or do you want to set up your own business? Do you dream about traveling around the world, or do you dream about helping others or starting a charity organization? What is it you want to do with the profits that you make in the Forex market? Because when you set those kind of goals and you have those kind of dreams, that's what helps you maintain stronger discipline. Now, let's talk about risk capital for a second. Trading should only be done with risk capital that you can afford to lose. So remember, don't get involved in this market if you're looking for, if you just lost your job and you're just looking for a source of income. No, that's not the reason why we get involved in the Forex market. Don't get involved in this market if you have bills to pay. That's definitely the wrong reason to get involved in the Forex market. Only use disposable capital when we get involved in the Forex market. If we don't have disposable capital, then we shouldn't get involved in the market in the first place. Because again, it's so easy to lose your money in this market. Also, make sure that you can even afford to be in the Forex market. So again, think about how much of an income that you earn every month or every year. And think about how much capital you're willing to commit yourself to when you get involved in the market. Because that also helps us in the long run when we're trying to achieve success in this market. Also, stick to the demo until you really know what you're getting into. And I've repeated this time and time again. Use those demo accounts so we can make trades with virtual money, because the more mistakes that we make in the beginning, the more mistakes we make today, the less mistakes we'll make tomorrow. The more mistakes we make in the present, the less mistakes we'll make in the future. It's better to make your mistakes now when real money is not involved. Okay, so let's talk about making a commitment. Here's what we need to know. Your time ability determines your trading style, meaning when is it convenient for you to trade? If you're very busy at work, then don't trade during work. Maybe some people have some time to trade when they wake up in the morning or before they go to bed at night. That's fine. But make sure that when you do get involved in the Forex market and when you do open up that trading platform, that you're able to commit yourself fully to studying the price charts and to study the news reports and study the release of key data. Also, if you're a day trader, since you're entering and exiting trades throughout the day, you need to be glued to the screen the whole time. Meaning, if you are the type of trader that wants to make quick profits throughout the daytime, that means you have to watch the Forex market like a hawk. You have to be able to pick up on trends before they happen, and trends, they begin and end so quickly during the daytime. So if that's the kind of trading you want to make, that is a really big commitment. Also, the longer the time frame you trade, the less you have to watch the market. So maybe you only have a small amount of time to commit to the Forex market, which is fine, but it's more recommended that you be a long-term trader. Open a position and keep that position open for a long period of time, which also works out nicely because the size of your profit would be much bigger than it would be if you were a day trader. Now, let's talk about returns. Traders will also have time to take in consideration drawdowns, meaning there will be those periods of times when you will have losing trade after losing trade after losing trade after losing trade. You'll have winning streaks and you have losing streaks. Just like in sports, just like betting in a casino, winning streaks and losing streaks, they're all part of the Forex market. Now, again, a drawdown is normally calculated as the distance from the highest value of your account to the next lowest point. So again, we have to understand that during the periods when we're losing our profits, that we're not losing too much of our profits. So losing streaks, they're expected, but we also have to keep in mind how to minimize the amount of the losses. And also, each trader must decide how big of a drawdown he or she can accept in order to hit their profit target goals. So again, we're going to have periods of time when we're not going to be able to make any profits off of our investments. So we have to be able to prepare for those low periods and those high periods. And there will also be times when we won't be able to read the markets properly and we won't be able to catch those trends. We won't be able to get it into a market before the new trend begins. Many times we do enter in the market late. So we also have to prepare a strategy for what happens if we enter the markets too late. Now, before entering the market, here's what we need to remember. Reviewing any open positions and making any necessary adjustments. So if you do have an open position, you want to examine it. Are you making a profit or are you losing money? So how do you adjust that in order to make sure that your account stays afloat? Also, reviewing yesterday's trades, because what happens in the past can also have a profound impact in the future. Also, getting yourself up to speed on the market, meaning as soon as we open up that trading platform, we have our euro dollar charts, our dollar yen charts, our pound dollar charts, whatever charts we open, we also need to know what's happening. So we also need to pay attention to the news, we need to pay attention to the data reports. Those should be some of the first things that we do before we determine whether or not we're going to get involved in the day. So make that part of your ritual, if you want to call it that. And also, identify any upcoming news that can cause volatility. So again, we want to pay attention to whatever news source that you might have, whether it be Reuters, CNBC, BBC, or Wall Street Journal, or whatever. We want to be able to catch those major news events and catch them early before the new trends begin, so we don't miss out on our key profits. And being ready to trade when the next trading session opens. So remember, we're not opening up our trading platform and then we're just immediately going to a chart and saying, I'm going to go long or I'm going to go short. Study the pair first. Also, compare what's happening in that currency pair to what's happening in the news. Compare that to any information that's being released by the central banks. Compare that to any information you're getting from other currency pairs. So take in all of those factors before we decide if we're going to go long or go short. Okay, so now let's talk about the platforms. Knowing your indicators and having them ready. So before we use an indicator, we need to know how it works. And we have to be familiar with it. Then we can apply it to the chart that we want to study. Also, make sure that you know your broker well and that you can trust him with executing your orders. So there are many brokers to choose from. Some are good, some are bad. So do your research and make sure that you're going with a broker that is trustworthy and that you're not going with a bad broker. Also, a trading plan should be personalized plan for you, a plan that fits your goals, risk tolerances, and your individual lifestyle. So your best friend or your brother might be a Forex trader, but don't just copy that person's plan. Develop your own plan, different from your best friend, different from your brother, different from your next door neighbor. Your trading plan should be a plan that's only for you. A trading plan that needs to fit your personality, fit your lifestyle, and fit your schedules. Also, trade on reality, not on hope. So many people or many investors, they get so desperate for profits that they'll make a trade that appears to be good, but they don't know the whole picture. So when we make our trades, we need to know exactly what is happening in this market and why these candles are bearish or bullish, why these candles are long or short, why do we have full bodies, why do we have short bodies with long shadows, why is there a doji at the end of that bullish candle. We need to know exactly what is happening on these charts and why we are looking at these candlesticks and why the candlesticks are positioned the way they are before we even think about getting involved in that pair. Now, here's what we've learned in this video. We got to have a solid strategy in order to be successful in this market because it is so easy to lose our capital and it's so easy to fail. So discipline is important, having a plan that's important, but not just any plan, having your plan is important and your strategy is important. Don't copy someone else's plan or strategy. However, if you want, you can study someone else's plan or strategy that way and then use that as a reference, but don't copy that person's plan or strategy because maybe that person has more experience with working with some of the indicators that you're not familiar with, or maybe that person has more time on his or her hands, or maybe that person has more capital in the market to work with, whereas you only have such a small amount of capital. So that's why it's also very important to develop your own strategy that's right for you. So always remember that the trading plan is a work in progress, meaning we may have a trading plan right now. You may already have a trading plan after this video is over, but don't make that a permanent trading plan. Always make improvements. Make as many improvements as you can on your trading strategy, because if the more improvements we make, the more successful we will be in our investments. So remember, trading plan and have a solid strategy that will give us an advantage in this market. Thank you for watching my video and good trading.